Hey everybody, it is Grateful Futures here. It's a beautiful Sunday morning. The market's currently closed. So today I wanted to do a video. It's a really important topic. One of the people in our group brought up a really good point. When anybody's learning volume profile, there's a lot of different you know levels. It's informationally kind of dense, right? You have low volume nodes long term. You have points of control. Sometimes, if you're just learning it, it can be hard to prioritize which one of these levels is kind of the most important one to watch in any given moment. And the last thing we want as traders is for our screens to be filled up to where we can't even see and we don't really know what's going on. Maybe we have mixed signals. So today I'm going to show you guys which ones to prioritize in any given situation to maximize your chance of having a successful trade and a successful idea of what's actually happening in the market. So what I would recommend, that the most important one of these levels, I would say, is going to be your long-term volume profile, low volume nodes. So you can see on my screen here, that's the long-term volume profile here on the left side of my screen. I'm going to go ahead and turn off all my session volume profiles just so we can go ahead and look at exactly, how important this is to our idea of pre-market analysis and what's actually happening on a macro scale. So again, just to let you guys know, if you guys are new here, all of these lines are horizontal lines on my screen are matching up with these low volume nodes. So orange is kind of a minor low volume node. Blue is kind of a major low volume node, and then yellow is a daily low volume node. So one that shows up on a daily, long-term volume profile. So let's go ahead and just kind of annotate this. I'll maybe scroll back here so we can just kind of show you guys how important these levels are, how price bounces in between them, and when they break, how we can actually execute a trade based on those levels. So maybe let's go right here. I guess let's start right here. Price kind of bases on this low volume node right here, pumps up to our daily low volume node. You can see there's kind of some sellers there, but they eventually break through this and push up all the way to our next low volume node up here where sellers come in. Where does it support? This low volume node here, and you can see how price is just kind of bouncing, and eventually we do get a break through that level, a small retest on this candle, and we fall. It does break through this one here and then comes down to this kind of low volume node area, and you can just kind of see how price bounces in between these. So you can use these levels if this is the you only want to pay attention to one thing. I would just pay attention to these long-term low volume nodes. You can see here price fails, does break through this level, comes down to here and fails here, moves down, and you can kind of see how eventually, if it fails here, fails through this one, we get down to our major low volume node, right? Because the lower the low volume node, the stronger the support should be. That's why these major low volume gaps in our long-term volume profile are areas of strongest support and end up actually being our long-term demand zones. So this one is kind of the biggest one in this local area. You can see here price bounces off of it. Can't get through this one though, fails. You see some buyers trying to hold there, but eventually it breaks down, gets a little bit below here, tests this lower volume area, price comes back through it. You see some buyers coming in again off of that long-term low volume node level. We get a bounce, a breakthrough, a retest right here, it holds, and price moves up. Where does it move up to? Right around our daily low volume node. You can see some sellers come in here. It eventually breaks through it, drifts up. Where does it kind of stop at? Our next low volume node. And you could kind of go through this and just annotate this all day and see where is the support likely to happen, likely at our next major long-term low volume node. If you do get a breakthrough of one of these, almost always you get some kind of retest of that level. And you can see it even comes back up, retests that level and fails, supports at the next low volume node, and just kind of you can really see what's happening in the market just using these long-term low volume node levels and see how accurate they are. Usually they're like the exact pivot points. So that's going to be the most important thing to always look at. Is you can really just have a pretty successful career if you just take these bounces off of the long-term low volume node levels. It's super successful. So if you're going to pay attention to anything in one thing in particular, that's what I would pay attention to. See how you see this buyer absorption coming right off of our major low volume node level. And it's almost to the tick again, like I was saying. So that's going to be the number one thing I would pay attention to. It's going to be those, but of course you can use other volume levels to give you a better idea of what's happening. Maybe if we're not exactly at one of those zones, or if you want to know if it's kind of likely to break, you can use other factors as well. So that brings me to my next most important thing that I want you guys to look at is going to be the previous day's point of control. So what is that, right? If we turn on a session volume profile, or if you want, you can just kind of do it by hand. If you don't want to put on the session volume profiles, that would be these. So it can get kind of busy on the chart. That's why I tend to just mark them off, and I don't have these on a lower time frame chart. But what I want to kind of say is, what does this mean? What does the previous day point of control, what significance does that have? So what it means is, let's take this trading day, for example. Prices pushed up into this next volume area up here and then had a concentration of volume in this area. So that means prices discovering higher, and then we had a significant amount of business transacted in this range up here. So let's go into the next day. Price searches a little bit higher. Let's actually make this a little bit just kind of, yeah, a little less busy on the chart to illustrate my point. So price even searches higher out of this zone and then comes back down and then tests this same area there where there was a lot of conviction the previous day. If that previous day, that most contested zone, right, the point of control is the area, the price level that was, most conducted between both buyers and sellers. If that previously most contested price is now support, that gives evidence that price is continuing its search higher, right? So if we retest a previous day point of control and bounce off of it, that is a good indication that price is continuing the trend. So these are most important, I would say, um, in trending markets. So let's say, for example, price came down, it's starting a new bull run. This is where we can use those previous days points of control as evidence to see if the trend is still continuing. So this is part of a discovery higher. So in this case, if we moved out of a consolidation zone, I will always be most interested in the previous day's point of control to see how price reacts off of it. That's kind of different from, let's say this, that's when we can see support off of that previous day point of control. What about, let's say, the day after this day? If we look at our volume profile for here and our volume profile for here, what happens the day after this? So we have a discovery higher, and then we have kind of conducting business in this volume area above. The next day we open below it, but we break right through it. However, we break right through it again. So this is evidence that we're not ready to break out of this previous day's range. If you see ranging between that, then it's kind of saying, okay, we're still having some business conducted here. I'm not going to look for a breakout off of that until I see a support of that previous day's point of control. So that kind of is how I use the previous day's point of control. Let's go ahead and discuss a little bit about the most valuable session volume profiles. So let's go ahead and turn those on. Now, there is a priority to these volume profiles. What I'm looking for is a volume profile on a session that is just like that one we just looked at. That's going to be a wide range, and then the volume is really concentrated in one area, just like this. So, what does that kind of mean? It would be something like this. We have a thin profile on one side and then concentration in one area. That's kind of synonymous to a what we call a bull flag or a P-shaped volume profile. And if it's a bearish flag, it would be a lowercase b volume profile. So something like this, where you can see the thin profile here and then volume is concentrated in that one day. That level ends up being pretty important going forward. I'll definitely, that's one of them that I'll leave up on my chart um, going forward, probably for the next few days, just to see if it acts still as support or resistance. And you can see it does break through a little bit here, but bounces and ends up higher. And then if that zone does get broken, eventually usually those get retested because there's generally orders here, right? If this is an area of high conviction, I can go into the next day saying there's probably still going to be some people that have buy orders there. Maybe they missed out on this run. Maybe there's some shorts there that are underwater here and they're ready to get out of their position right there. So those areas of heavy conviction are the most important volume profiles of sessions to look at. That kind of contrasts to, let's say, maybe, really most of the other ones. So a lot of the time, the session volume profile is not as important as the long-term low volume nodes, but if you have a day of that really strong conviction in one particular area, then it can be a really, really important factor going into the next day. For example, we have a start of a breakout from a bear cycle. And then we have our point of control right here in this zone of heavy conviction. I'll mark off pretty much that whole peak and then mark off the point of control. And we see that price breaks up through that, but where does it come to retest? That area of volume right here supports it and then moves up. So that is one really, really important thing that I do look at, especially in a ranging market. But again, I think it's even more so important to understand these long-term low volume node levels. So one thing that I will do is if a level has been hit multiple times, for example, this one hits here, and it comes down, it hits it again, and then breaks through it. At that point of break, I can assume there's probably not that many buy orders left in that zone. So I'll go ahead and I'll erase that point of control zone there. So that's what I'm looking at for session volume profiles. For example, let's just kind of make an idea of this previous day. This was Friday's session, which was an absolute crazy session. We'll talk about that a little bit later, but I would be looking for continuation of this trend if we can open up maybe higher and then get a retracement to that level where we have support. In that case, I'll probably look for a long trade off of that point of control since there might be some buyers that are left in that zone. So now let's go ahead and talk about another really, really awesome volume level that I'm looking at. What I would be looking at is previous session points of control that have not yet been tested. So let's go ahead and turn this back on. And unfortunately, they only give you so many. So if you have a market that's trending down and it's getting to a range that's outside of what they allow in TradingView for previous so many days of that session volume profile, I do go back and do this manually. For example, this one right here, this session, it's a good example of kind of the opposite of a P-shaped volume profile. This one would be a B-shaped volume profile, or kind of synonymous with a bear flag. So you have this really thin push down, the thin volume on the push down, and then heavy conviction down here. I would go ahead and mark that off of the volume area of that peak. and then extend the volume, the point of control with array, and we call that a virgin point of control, right? Because it hasn't ever been touched again. And the market really does not like to leave these zones untested. You can see in history there's been a bunch of these good situations where, let's say, for example, this push up, and I've done this many times in other videos, when price comes back down to these virgin points of control and tests them and holds them, it ends up being, a good point to end up getting long if you do see support off of that level. So for example, this one has never been touched yet. I'm going to extend it out. Price comes all the way back down, breaks through all of these different low volume nodes levels, comes all the way down, even breaks through this major long-term low volume node right here, comes right down in pre-market or post market, sorry, tests that, and then you can see how strong buyers are off of that level. It ended up, resulting in a crazy bullish day where we broke through a ton of these low volume nodes, had support here, and then ended all the way up here. So those virgin points of control are levels that I'm looking to target for potential ending of downtrends. If we're going through let's say just got through a downtrend and we left some of these virgin points of control up at the top, those could be good targets to hit if maybe you're a swing trader. So that is what I'm looking at for virgin points of control. Those are good areas where you can kind of look for potential buying to kick in again after a down cycle. Now, I do want to have one quick word here about when these are less important. So, if you are a little bit into the actual session, and let's say the market is strongly trending in one direction, for example, let's go ahead and turn this off, and I'll just draw this one to make it less busy for you guys. This would be a virgin point of control where we can actually see, if we thought about this as what we were talking about the previous day's point of control, to this day would have been a great opportunity to go short off the fail of it. But again, it was never really fully tested, so that's probably going to be a bullish target if we do start moving up. However, during this day, we see there's a strong bullish trend moving into that. I don't want to think that there's going to be a reversal off of that if the momentum of the day, the whole market's green. I don't really want to try to get short off that level for a reversal unless we see confirming market structure. So if you have a strongly trending market during the day coming into one of these levels, it's probably just, if there is a little bit of sell-off, it's probably just going to be a pullback. Usually you want to go with the market direction, the market momentum, especially if one of these major other virgin points of control were tested. Um, Also think that, there's tons of shorts coming down on here. If we do start to get some bullish momentum, probably going to be a lot of short covering. I don't want to try to go short into that. So these are really helpful, especially when they're tested in pre-market. If they're tested and then the market starts to move up off of them, that's good, but don't try to catch a reversal off of these virgin points of control if there's strong market momentum going into it. So that's one thing I do want to say. These aren't always perfect reversal spots, because the market can just kind of push through them. Now, another thing I wanted to talk about that's sometimes as important is when you have a consolidation. So if you have a consolidation, let's say, for example, you could use any one of these really. Let's say for this one, see how when you see the previous day's point of control has kind of just been oscillated around, this is a consolidation zone within this long-term volume area. So what we can do is draw out our volume profile for that entire consolidation and then see, hey, if price comes down near this low volume node of that consolidation, probably is going to get a reversal off it. If we come to the top of this low volume node consolidation, probably going to get a reversal off of it until we see major support off of that consolidation point of control. This day was a little bit, it was kind of a really strong buying event, so we didn't get that perfect retest of the point of control, but a lot of the times you do. For example, let's look at another good example of a consolidation. This is one right here. So price came up into this area, rejected, and is kind of consolidating in this volume area. If we take our volume profile of that whole consolidation, you can see that price is now on this day right here discovering lower. Where does it retrace to? It retraces perfectly to that consolidation point of control. And if that, it's all the same topics. If that point of control of this is the previously most contested price zone right here of this consolidation, if that is now acting as resistance, it's going to be a really good short opportunity. And especially because you can see it breaks through and then comes back to retest that low volume node, that gives you a good evidence that we're done in this consolidation range. So you could have gotten short pretty much when you see this fail here and then break through that low volume node. You're going to come down. At least for the short term that day. And then that's the confirmation there that you could even have that massive short at the end of the day. So that is really what I wanted to show you guys. You can, again, the most important thing is going to be these long-term low volume nodes, and then you can use the previous day's point of control as a kind of additional, indicator of maybe we're going to continue this trend. Let's go ahead and show you one more thing before I go to another ticker here. Another thing I want to do is, let's say we are on a bull trend and then we start to see a little bit of a pullback. Another thing you can say is, hey, where are we probably going to pull back to? Is usually we pull back to an area of heavier volume long term. So let's go ahead and show you guys an example of that. Let's say right here, I guess it doesn't really matter. We can take a volume profile of here to, let's say, all the way here. So this trend, when you see it's kind of slowing down here, where does it pull back to? An area of very, very heavy volume. That can be an indication of a potential reversal. Let's say maybe right here. So of this, when it comes up, comes down, pulls up, and you can see it start to kind of slow down. Where is this eventually going to pull back to? It's a good chance that it pulls back to an area of heavier volume, right? Because as we're pushing up, buyers are running out of liquidity. Where does it fall down to? Where there was more liquidity in the past. So those are places that if I do see price start to pull back off of a major kind of a bull run there, I will take note of where the swing point of control is, so I can kind of get an idea. If I see buyers come back in this zone right here, we're probably back to the bull run because we've caught more liquidity off that liquidity zone. That is one thing I wanted to show you guys. Another good example of that is right here. So let's just go ahead and draw this. So as prices pulling up, pulling up, pulling up, now we start to see a little bit of pullback right here. Where does it pull back to? That zone of heavier liquidity. So where, bulls are pushing up, they start to run out of liquidity, prices fall all the way to where there was the heaviest liquidity zone in the past, that long-term swing point of control. But that's only something that I'm looking at if we start to pull back from a larger bullish trend. I'll get an idea of where the long-term point of control is. Now, that is pretty much what I wanted to show you guys. You guys can go ahead and look at some of those examples, try to find them on your own time. Maybe we can see one or two more. So there is right here, let's look at this one. So we have bulls pushing up. If we look at the point of control here, we can see it kind of test that point of control and moves up. Wasn't a very, very strong example there, but that is pretty much what I'm looking at for. So again, pay most attention to those long-term volume profiles, low volume nodes. Let's go ahead and maybe look at a couple stocks so we can kind of show that this doesn't just work with SPY, it works with everything, that has volume and price, it's probably more um, applicable to large cap stocks. For example, this is AMD. Let's go ahead and just kind of annotate this chart so we can see this is our major long-term low volume node zone. Prices pull back. As soon as it makes it to that long-term low volume node, we start to see buyers. We see buyers there. And it just kind of bounces off of that low volume node zone. Let's go ahead and zoom in for a second to see if we can find some of these good examples here. So if we look at a volume profile of maybe, let's look right here. So we have this push up, and we have a kind of a push up here, a consolidation here, and then again it consolidates in that same zone. That is a double point of control. So we have a good push up. We want to see if buyers are going to maintain this uptrend. Price pushes up. Where does it pull back to? This area of really heavy conviction right here. And when you see that price test right there, it gets back above this low volume node long term. That is a huge, 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 huge bull push. Let's go ahead and look at this one. This is probably also going to be a pretty good example. So when you see this consolidation here of price after it tested this volume node zone right here and pushes up, maybe we want to see if price is going to continue up. Where does it support? Right at that point of control of this new consolidation zone, and it pushes up again. And you can kind of do this. This is a good example, right? This is a consolidation here. Let's go ahead and take a volume profile of this consolidation. So we see prices kind of oscillating through here. And if we want to see, when we see this price pushes down, that's a discovery lower. Where does it pull back up to? The point of control of that consolidation zone. When you see prices discovering lower, retesting that point of control of that consolidation higher, I've said this in my previous videos, that is one of the best opportunities to go short, seeing that, hey, look, there was a zone up here where prices were conducting, buyers kind of lost, pushed the price down, but when it retested that previously contested zone, that point of control, and fails, that is a great, great, great example of a good short opportunity, knowing that price is probably done in this volume range up here. Where does it fall down to? Again, comes back to this area of heavy conviction down here, bounces, pushes up, still cannot get through that point of control of the consolidation, right? Price is sold off down here. There's probably, the zone hasn't really been broken since that happened, so you can kind of assume that there might be sellers still in that zone. So you can see prices push up into it, can't get it through it, can't get through it, and then they push down. So that's just kind of how you can start to look through these charts, kind of pull up your volume zones, know what's most important based on the shape of the volume profile, how long price has been in that range, how strong that point of control is. If it hasn't been broken and price retraces to it, likely there's still going to be some buyers or sellers in that area to push price off. So if we go ahead and make let's make a plan going forward. So we see that price has really been ripping down on AMD. It comes all the way back down to that long-term low volume zone right here and pushes up. What are the previous volume profiles looking like? So we have a really strong push down here and then a consolidation in that area, right? That's a B-shaped volume profile like that. So that, I know this area is going to be pretty strong with sellers or buyers if it's broken. Price pushes down, can't hold those levels, it goes all the way down into our long-term low volume node right here. Buyers enter the market, and now this point of control that was previously that heavy seller conviction right here gets broken. So I know that, think about it kind of in terms of psychology. There was previously a lot of sellers in this area. You can see there was sellers right there, but when they got broken, now this is kind of the zone you should be paying attention to. So if buyers come or sellers push the price back down here, think about it. There might still be shorts that were shorting here, shorts that saw that retest shorting down into here. There's shorts that are shorting when it comes back to that. If it gets broken, one, so there's probably still some shorts underwater there. If price comes back down to that area, there's probably going to be some shorts ready to sell at break even. So that's going to push the price up. Buyers are going to see that support off that volume zone of conviction. They're probably also going to enter, and this could be a really good opportunity for a long trade or a long swing off of that volume zone. So that is kind of what I have for a plan for AMD. I don't often trade AMD. I'm usually on SPY, but I saw this. I thought it was a really good kind of setup. So that's something I'm going to be watching. Again, super, super important to not just look at every single price level, look at the most important ones. Where was there the most conviction recently? If price has hit these levels multiple times, you can go ahead and erase it. For example, this one right here, there was, kind of a good consolidation on this level. Maybe I'll leave it up. But it did eventually, see right here, it was still support, but it did break through that. So I'll probably just go ahead and erase that off my chart. And if it does get to this low volume node right here, I'll probably take some profits. And if it gets through that and retests it, we're probably going to come up to this virgin point of control up here, this zone that has not been tested yet. So that's one video I wanted to do for you guys. I'll probably do some more videos on this. It's definitely one of the more complicated topics that I've talked about, but that's it. So pay attention to those long-term low volume node levels. That's kind of the most important, and then use the previous day's point of control as a gauge to see if the trend is still continuing. If you have session volume profiles that haven't been tested yet, those can be good targets. If you do get, like let's say for this consolidation, if it does break through, retest it, and you start to see some sellers, that is a good opportunity to get in short off of these. And then you can, if they haven't yet been broken through, you can leave those up on your chart to see if price comes back to it, what happens. So that's what I wanted to talk about. If you guys have questions, I have a Discord that is open, free, available to everyone. I chat with you guys daily, can give you guys free levels, my market analysis. We kind of just talk about volume profile education. So that link is in the bio. Love to see you guys in there. As always, guys, happy trading.